On our Cashflow Excel template, you can enter up to 20 different sales lines. And down the left hand side you'll see that the first 3 lines are set up as Project 1, Project 2 and Project 3. And this has been set up for ABC Construction Limited. After that you've got Type 4 all the way through to Type 20. You can set up your own heading in the next column. You'll see that Project 1, 2 and 3 has been typed in there. And if I type in over Type 4, Project 4, you'll see down the left hand side that that's changed to Project 4. And these headings will filter through to the reports. The next column is for setting the VAT rate for each of the sales lines that you've entered. This could also be sales tax or GST if you're in Australia or New Zealand. There are some default rates set in there, and you've got 0, 5, 20% and exempt. If the rate's not showing that you want, just go straight to the Info tab, scroll down to the rates that already exist, enter a rate in there, let's say 15%, go back to your Data tab, and you'll see that the 15% has been pulled through. The next column is for the terms of payment, and in this row the terms has been set as 2, and that represents 2 months. You have the option to set the terms from anything from 1 month forward to up to 12 months credit payment terms. But on the other side of that, you can also set it so that they are prepaid from 24 months in advance all the way down to 1 month in advance. You can also set it to 0, which is effectively cash sales, so when people pay you in the same month that you raise the invoice. And finally, you can set it up to receive credit card payments. And where you've set the credit card payment, if on the Info tab you set your credit card charges to say 1.5%, coming back to the Data tab, any entry relating to the credit card, the Cashflow Excel template will automatically charge that amount of money not only to the profit and loss account in your expenses and overheads, but also this amount will be debited or taken out of your cash flow forecast too. The following 2 columns relate to factoring. The first column is factor advanced. And what this means is where you take on factoring or invoice discounting, this is the amount of money for that particular sales line that the factor company will advance of the amount of sales that is factorable. And that leads me on to the following column, which is the factorable percentage. Because not all sales is factorable. For example, you can only normally factor business to business invoices. So any invoices of B2C would not be factorable. So if you choose to just put one line of entry along here and say, for example, only 80% of your sales are B2B, then the system will only allow 80% of your sales to be factorable. And then going back to the previous column, 85% of the 80% will be what will be advanced from the factoring company. The next series of columns relates to the entries for each of your months of the cash flow forecast. And in the month of January, we've entered £14,000. In February, £14,500, March, £15,000, and so on. You can then scroll across, putting all these entries in, all the way through, for 84 months, or a total of 7 years. Which takes us to December 2024. Once you've entered your sales data, the information will be pulled through onto your trading report. And on the trading report, you'll see down the left hand side that it's got your Project 1, 2, 3 and the new one we entered, Project 4. Also you'll see that it's pulled in the VAT rate, the new VAT rate that we entered of the 15%, plus the 2 rates of 20%. And then for this first 12-month cash flow forecast period, it's given you the trading amounts, or the total sales, going across the page. And of course, looking across there, we've got a lot of blank lines. So quite simply, just do a Control-N. And what it will do is it will get rid of all the 0 lines. So on your reports, you'll only see the lines where there are numbers. And if we then want to print the report, just simply go to Print, and on there you'll see your turnover or your sales figures. Below that is your cost of sales, but that's for the next video. The totals from your trading report will be pulled through to your profit and loss report. So running across the top there, for the first 12 months, you'll see the total turnover on your profit and loss forecast. Also, the figures will be pulled through to your cash flow forecast. So the first line relates to receipts, but the receipts here will be inclusive of VAT, sales tax or GST, whereas on the profit and loss account they would be net. And the figures that are pulled through onto your cash flow forecast will be affected by the terms that you enter on the data sheet. So if we go back to the data sheet, and where the first line was paid in 2 months' time, and the amounts pulled through to the cash flow forecast will be delayed by 2 months. Finally, any amounts that are left outstanding at the end of each month or at the end of the year will be pulled through to the balance sheet, and they will be shown as trade debtors. And in this case you can see that it says assigned to factor. That's because we've set the sales up to be factored. If we turn the factoring off, that sign would disappear.